Thank you very much, Fernando, for this introduction. Thank you to all the participants to join this webinar and for your interest in the GPM series. This issue is about the utility scale segment, and it's the first one of the utility scale segments we have produced so far. New issues of this GPM for the utility scale segment will be produced in the next year, the year after, etc. So that all the information is updated and new countries are added to the analysis. As you know, what is it here? Yeah, okay. So the presentation has two main parts. The first one is a brief introduction about Clarion, and the second is the actual explanation of the analysis we have conducted. As some of you know, Clarion is a strategy consulting company with a full focus on the new energy markets, mainly renewable energy markets, smart grids, and energy efficiency. We provide professional services within the policy consulting area, helping mainly public bodies and governments in the development of their policies. Also strategy consulting, helping companies within their corporate development with activities such as designing commercial or corporate strategy, business planning, improvement of margins, restructuring, etc. Also in the financial advisory segment, we take care of small and medium M&A processes, including all the services listed in the slide. And also we produce some reports, what we call market intelligence, and this is the Grid Parity Monitor, one good example of it. Clarion has two main offices, one in Berlin and one in Madrid, and we also cover many countries worldwide. From these offices, we support in both contacts and also our partner offices, which are located in Milan, in India, in New Delhi, in Colombia, in Bogota, and in Chile, Santiago de Chile. And that's it. So now we start with the explanation of the analysis we run in the GPM for utility scale segment, and I leave the floor to my colleague Carolina Fondo.
So good morning to everybody, or good evening, and thank you, David, for the presentation. So the first concept that we have to define in order to present this study is the generation parity concept. So PV generation parity could be defined as the moment when PV investors could fulfill completely his profitability requirements with only market prices, and they will need no incentives. So as you can see in the figure below, yes, in the picture, we have tried to represent this concept, and we can differentiate two situations, the pre-generation parity situation and the post-generation parity situation. So the first one would be when electricity from wholesale markets is cheaper than PV-generated electricity. So, of course, PV sponsors will need support mechanisms as feed-in tariff or maybe specific tenders. The post-generation parity situation would be when PV-generated electricity is cheaper than electricity from wholesale markets. So the PV generation would be competitive without any kind of incentives. So with this idea in mind, now we are going to talk about the GPM report, this specific GPM report. Yes, that's it. Okay, if you have had the opportunity to read our previous GPM reports, and if you haven't, I strongly encourage you to do so, and they're freely available in Leonardo Energy website. So as I was saying, if you have read our previous GPM reports, you will be aware that the series analyzes grid and generation parity in several markets. So the distinctive features of this issue would be, first of all, the perspective. This report is only focused on the utility scale segment. We are talking about 50 megawatt plants using a single access tracking system. The plant is a merchant plant, if possible, and the markets that we have chosen are Chile, Italy, Mexico, Morocco, Texas, and Turkey, as you can see in the figure on the left side of the page. And for each market, we have considered one specific spot in order to get real data for the PV production. And then the two most important features of the methodology of the report are that the assumptions are based on a project finance scheme for the financing of the project with a 70% debt ratio. The inputs are real data, real market data for EPC prices, and we have modeled real economics for each project based on the PV plant production from the investor perspective. So okay, the next slide.
One moment, please.
Okay. We have a very small problem with the presentation. Okay, that's it. So as usually, thank you. As usually, the PV Grid Parity Monitor is sponsored by renowned international companies. So this time we have enjoyed the collaboration of our platinum sponsors, which are BayWa and Nertis, and of course of our gold sponsor, the Spanish company Ingeteam. We have also, the GPM monitor is also supported by relevant PV partners in most markets. We're talking about local partners. In this time, we have enjoyed the collaboration of Acera from Chile, DII from Morocco and Turkey, and the Mexican associations ANES and ASOLMEX. And of course, we have enjoyed the support of the European Copper Institute. So the methodology of this report is based on two main concepts. On one side, the required tariff that the PV investor will need, and on the other side, the reference price in the local electricity market. So the generation parity situation will exist when these two values match. So the first one, explaining this concept in a more detailed way. The required tariff is calculated as the theoretical rate with which the PV investor would achieve at least the minimum profitability sought in order to build the PV plant. And in other words, the PV sponsor will only invest his money if he receives at least this required tariff for the PV production. So, in order to calculate this required tariff, it's necessary to model the economics of the project. And for that, we have considered real market data for the initial investment, operating expenses, and debt costs. And the only remaining data necessary to complete the economics of the project is income. So in this regard, actual electricity production of the PV plant can be modeled. So the only unknown of our equation is that required tariff. But of course, we know that when investing in a merchant plant, a PV investor will ask for a specific profitability. And this profitability is called the cost of equity. This concept, the cost of equity, is specific for each market and each project. We have collected a cost of equity for every market, considering this kind of project. And with this number, we have calculated the so-called required tariff. So remember that we have the required tariff, but we also have a reference price in the local market. So it is necessary to choose a reference price in the market to compare the required tariff. So in this regard, the following market prices can be considered as a good reference. The marginal prices, for example, of the day-ahead market, and also price of PPA contracts. So marginal prices are quite easy data to achieve, but a PPA price are not always so easy to obtain because this is not public information. So this report selects between these two alternatives as a simplification. On the one side, a marginal price where possible, and on the other side, a regulated tariff for large consumers. This is because we have considered that in countries where no spot market exists, this regulated tariff can be considered as a theoretical upper boundary of a PPA contract. So, in the report, the marginal price has been selected for all countries but Morocco, where a regulated tariff has been chosen. This slide shows the main results of the report, the situation, the generation parity situation in each country. So we have the red dots, which are for the 2014 situation, and also the blue dots, which are for the 2013 situation. So you can see in the figure that only Chile is in a full generation parity situation. But Morocco, Italy, and Mexico are or have been close to generation parity recently. On the other side, Texas and Turkey present a worse generation parity situation, and they are situated in the white side of the figure. If we explain each market with more detail, first of all, we are going to talk about Chile, the best situated country in the report, where reference prices are clearly above the required tariff for a PV investor. Well, in Chile, we have chosen a specific spot for the modeling, which is Diego de Almagro. And you can see that the reference price is almost doubles the required tariff for a PV investor. So both high electricity rates and extraordinary radiation levels contribute to the full generation parity in this Chilean region. And these prices are in the SIC market, in the system interconnected, well, the central market in Chile. In Chile we have different markets with different prices. Diego de Almagro is in the SIC market. And this specific market has presented high volatility rates. It is true, but we consider that we have a wide margin to absorb potential decreases in the spot market. So this full generation parity is quite consistent, and it is expected to continue in the following years. If we analyze the next country, which is Italy, the situation is not so positive. It is true that in 2013, the generation parity was close. You can see that in the figure. But reference prices have decreased consistently in the last year. So the situation is not so positive nowadays. However, the appetite of financial institutions in the Italian market is recovering after past years' financial crisis. So we have hope that the situation will keep on, the PV required tariff will keep on decreasing and the situation will improve. So the next country will be Mexico. Again, we had a positive situation in 2012 and 2013 with a generation parity, with a full generation parity situation. The specific spot chosen for Mexico was Sonora region with very positive irradiation conditions. And, well, I'm sure you know that Mexico has an energy reform underway, so this situation that we have presented is a theoretical situation. We have considered the spot prices in the nodal spot prices in the country, and this is not possible at the moment. I mean, if a 50 megawatts plant will be at the market in Mexico, they will not receive this tariff, but we are presenting a theoretical a theoretical situation. And with this situation, and after the drop of the reference prices in the last year, Mexico will not present a generation parity situation. But of course, with the energy reform underway and the evolution of wholesale market prices, we strongly recommend to monitor this market because the situation could easily change in the next year. The next country that we have studied is Morocco. Remember that this country is the only one that has not wholesale market prices, that we have considered a regulated tariff to do this exercise. And we can see in the figure that generation parity is quite close. In fact, the actual reference price that we have considered is a subsidized rate, which is going to increase in the following years. So the generation parity is going to improve, and we expect that in the following years, Morocco presents a real and a full generation parity situation. For this market, we have chosen Ouarzazate region that has extraordinarily positive irradiation conditions. In Turkey, you can see in the figure that generation parity has not been reached. We have chosen Karaman region. And for this country, we have selected the wholesale market prices in the spot market. And you can see in the figure that despite of the significant decrease of PV prices, mainly due to the weakening of the Turkish currency against dollar, the required tariff is quite high. You need to import PV items to build the PV plant, and this is hindering the generation parity. So relative high discount rate, the cost of equity is quite high also in this country. So the situation for a PV investor is not very positive. You can see that the difference between reference price and required tariff is quite high. Even the required tariff may double the reference price that is real in the market. And in the last country, which is United States, more specifically Texas, we have considered the Texan region. Although the required tariffs are are very interesting, below 100 USD, $100 megawatt hour, which represents one of the lowest PV rates analyzed. Well, the PV generation parity is still distant. This is because the reference price is quite low. We are talking about less than $40 per megawatt in the ERCOT market. So the Texan market has a very positive impact of investment tax credits for alternative energies, and this has been taken into account in the analysis. But these ITC do not compensate medium irradiation levels and low wholesale electricity prices. But with a growing trend in electricity rates, we are talking about annual increase of over 13%, and a decrease in PV tariff, generation parity in Texas should be monitored next year and the following years, because we really expect that the situation is going to change in the medium term. These $100 per megawatt may not allow competing in the wholesale market, but in United States, PPA contracts have been signed, so we really expect that these required tariffs for PV investors will allow a strong development of PV utility scale plants in the country. So if these are the main conclusions of the report. To sum up, the results of the GPM analysis show that only Chile is in a full generation parity situation, but Morocco, Italy, and Mexico are or have been closed recently. So if you consider the volatility in wholesale markets and also the fast decline of PV prices and the ongoing regulatory reforms, this study, the PV utility scale competitiveness, should be monitored over time. So for example, in Mexico, we have seen that last year and in 2012, generation parity was a reality in the country, well, at least in Sonora region, of course. And nowadays we have a completely different situation. So we should monitor these countries to see what is happening in the market. And of course, the fact that generation parity has not been reached in a country does not imply that utility-scale PV plants will not be built, because other schemes or other reasons may trigger such an investment. For example, a renewable portfolio standard, or maybe a feed-in tariff, or also a convenient PPA scheme with a private consumer. So you should remember also that this required tariff was calculated based on the economics of a PV plant under a project finance scheme. And of course, private companies have other alternatives to finance the plant. For example, the utility may choose a bond financing scheme or others. So this could significantly improve generation parity results. And specifically this concept and also other countries' details should be analyzed, and we expect that the next GPM report focused on utility scale generation will include this issue next year. So I hope that you have enjoyed the presentation. Of course, we are going to expect your questions, but before the question and answer segment, I would like to present my colleague, Davide, which is going to present the next GPM reports and the schedule that we have considered for the launch of these reports. So hello, Davide.
Hello, Carolina. Good afternoon to everybody. This is Davide Sabatino. I'm the product manager of GPM reports. Thank you for participating. Well, I'm going to show you the planning of the GPM reports for the next month. We are preparing the third issue of the GPM dedicated to the residential segment, where we will analyze new countries. Then on January, we are preparing a two special edition dedicated to Mexico and Chile, where we will analyze the three segments: residential, commercial, and utility scale segments in the countries. In the new year, we are preparing the second issue of the commercial segment and the second issue of the utility scale segment. If you are interested in sponsoring the upcoming issue, please contact me to the contact below. Thank you very much.
Okay. So thank you very much, Carolina, Davide, and David, for your presentation and your explanations. We will go now for questions and answers. So at this point, I would invite our audience to submit your questions through the Q&A box, which is on the top in the middle of the screen. So don't hesitate to go ahead. Meanwhile, we have the first question from Ben Street and send it to the public vote. I will read the question. How would the spot prices be affected in Chile with a huge amount of PV installations? Thank you.
Well, I mean, this I think exceeds what we analyze in our report. But from an overall knowledge of electricity market, if a higher amount of energy generation gets in line in the market, prices probably will be depressed, which is what happened with PV, and not only with PV, but also with other technologies.
Okay, thank you very much. So let's see, all the questions are coming. Okay. Meanwhile, I would submit a question myself. Chile is the country presented as the one having grid parity at generation, wholesale generation scale. Do you see big installations growing or being made in Chile?
Fernando, this question is not written anywhere, right? Because I cannot see it in the screen.
No. I'm just let me type it just for the records. So Chile is the country having utility scale grid parity. Are you aware of the development of big PV installations? Okay, so let me just submit it formally. Q2, sorry. Yeah, that's it. So basically, I will break my question. As the report points that Chile is a country where big PV installations would be profitable without any subsidy. Is that something that is happening already in Chile or not? Or to which extent? Thank you.
Yeah, the answer is yes. There are several large plants being developed in Chile. This is something we know because some of them have been announced, and some others we know because of conversations with some of the companies running the investment. And also, I think 2 other big plants have been announced over the last month, I think, in Chile. So yes, I mean, Chile is definitely an attractive place to build big plants to be connected to the grid directly.
Okay, thank you very much. I would have, meanwhile, also another question. So Chile is one country. What are the next countries that you expect to be competitive at utility scale in the coming months or years? Thank you.
I think Central America is an interesting area. It's an interesting region. I mean, those countries have high electricity prices, and the irradiation conditions are relatively good. So I think those countries are interesting places. The only problem is that the countries are small, and each country is a different world somehow. So regulation is different, and all the administrative work is different somehow. So definitely that's one area, and probably there could be some countries in the north of Africa or the Middle East that could be interesting as well.
Okay, very good. So meanwhile, we have another question from Walter Stewart. Have you quantified the PV opportunity from the Chilean mining sector? Thank you.
No, we haven't quantified that, although an exercise could be done, of course. However, we need to consider that, most of the plants, the largest plants being planned and built in Chile are merchant plants, so are to be connected directly to the grid and the energy is to be sold on the market directly. So this is what we're discussing here.
Okay, good. Next question from Alberto. How long is it expected that energy reforms in Mexico will contribute to further growth of PV installations?
Well, that is a good question. I mean, the government expressed their interest to promote the growth of sustainable energies. However, there are several sustainable energies, of course. So I don't know. I mean, the situation in Mexico before the reform was, I would say, good, relatively good. Let's see if what we get at the end, because of course the first laws announced are not detailed enough to understand to which extent they will be good or not that good for PV. But let's hope that that PV stays in a good position once the complete reform is completed.
Okay, thank you. There is another question from Orlando. Did you make any survey on how the utilities' common reaction would be facing the high integration of PV to the electrical grid? Well, probably not. Maybe you can comment on it.
Well, the answer is no. We haven't made any survey about this. However, I think utilities are monitoring this process. They are taking into account what is happening within the within the PV industry, and they are monitoring generation prices, etc. And I think some of them probably will try to block this development, but I think also all of them are thinking somehow how to jump into this trend as well and take part of it, participate on these opportunities.
Okay, thank you very much. So I think there are no further questions at this point. So if nothing else, I would like to thank you, our presenters today, for the introduction to this interesting analysis. And also thank you to our audience for your interest and your participation. Now I will give the floor to David and Carolina to close the session. Thank you very much.
Carolina, do you want to close?
Well, I would like to thank you all for this webinar, and hope you enjoy the report.
If you have questions, you can send us your questions via email, or you can call us, or our contact details are written in the report. We'll be happy to discuss with you any issues you may come up with about the reports. Thank you very much.